Okay, good morning, everyone. You're most welcome to today's episode of the Market Snapshot. My name is Norbert Kiza, and I'm happy to be with you all today. Everyone, for staying patient. So, good morning, everyone. Today is the 10th of July 2024, and I'm happy to be taking you guys through the snapshot for today. So, for today, we're just going to go through what's currently happening in the markets, do a review as well of what we had from Jerome Powell. Yesterday, we had Jerome Powell. He was testifying before the Congress Banking Committee, and of course, they were asking him questions regards to the current state of the economy, and of course, getting some hints from him on when the rate cuts are going to come. Yeah. So before we go through some summary from the statement, we can just quickly look through what's currently happening in the markets. So we are seeing that right now we are seeing a lot of recovery on a number of things. Crypto, which had been badly battered, is now currently recovering. We saw that, especially from last week, there was a bit of a sale on some of the cryptos. Again, crypto is available for trading on FX Pesa, and the sale was due to a reimbursement plan that was being carried out by Mt. Gox. Mt. Gox, I'm sure most of you recall, was an old exchange that collapsed some time back, and they were just reimbursing their clients. And of course, we're also seeing that Germany had also been selling a bit of Bitcoin, which was putting a bit of pressure on the price for the Bitcoin price. But now we are seeing that there's some recovery there. The stocks yesterday were trading relatively higher. We are seeing that Tesla is one of the leading, components now for the Nasdaq, and I believe is one of the reasons why the Nasdaq is testing higher levels. And we are expecting to see Tesla possibly moving higher and higher on the back of, of that renewed interest. A number of other stocks also did well yesterday. We saw Nvidia rising sharply higher yesterday. We also saw that there was a sharp move higher also as well for Apple, and of course, these particular components are pushing the index higher. Now, for those of you that maybe are trading US 30 roll, we have the Q2 earnings are going to kick off on Friday, and I'm expecting that we're going to have the Dow Jones also starting to move higher on the back of those high earnings. Some companies are going to be releasing, from JP Morgan to Citigroup. All of them are going to be releasing their earnings, so we should see a move higher on that index. Now, going over to the Forex market, this is how the Forex market is looking like at the moment. From yesterday's statement, as well as cross-examination by Jerome Powell, we saw that there was an initial sell on euro dollar, pound dollar, AUD dollar, and of course NZUSD, as well as gold. But eventually later within the session, we saw that most of these currencies recovered, and they are now trading steadily higher. Now, gold, of course, is also in a nice strong buy, of course, from those hopes that, a rate cut is going to come soon enough. And I believe this is the reason why we are seeing gold trading steadily higher from its Monday lows around 2,355. Yeah, so looking into the markets for now, we are seeing actually that most of the markets, I think, are recovering quite nicely. We are seeing some recovery for the euro indices, which of course were trading lower on some tensions from the far right alliance in France, and also some news came in that the new party, the far right far left alliance, wants to introduce a 90% tax on the rich. So I don't know whether the markets were reacting to that, but there was a very sharp sale yesterday towards the start of the US session, but now we are seeing the indices are recovering nicely there from Europe. Now, going over Powell's statement, this is again the some of what we got from Powell. So again, most of what Powell provides usually in his most of his guidance is normally vague, because that's usually how the Fed communicates. They don't usually want to give you hints on when they are going to act. He maintained a relatively neutral stance, yesterday, indicating that they are going to stay mostly data dependent. But again, maybe, and I quote, he mentioned that the next rate decision is unlikely to be a rate hike. So that was Powell. He mentioned that. And I believe that's also the reason why we saw, after that initial sell-off we got from the market, we saw gold rallying higher. We saw also the indices rallying higher. All that possibly must have been because Powell gave us some kind of indication that the Fed is most likely going to act soon. Now, again, we also got some comments from Powell on the economy. He mentioned that that the labor market is cooling, and of course, it's cooling just as they want. They want at least for them to see some cooling in the labor market, so that they don't get wage inflation increasing, and of course, causing it to go far away from their target of 2%. So I think, most of what we have gotten from Powell is indicating that a rate hike should come soon. We also saw a lot of grilling from the banking committee. They were putting Powell on the spot as to why they are taking long to hike rates when they are seeing that inflation is declining, and of course they're also seeing that the labor market is cooling. But he mentioned that much as it's cooling, and of course much as the inflation is steadily higher, it's not a cause of concern for them to rush and act rates. So essentially, he's giving us some kind of indication that they want to act soon, but they do not want to act quickly, which is what the markets are currently indicating. The markets are currently indicating that the Fed is going to act quickly, which is not the case. Now, going through the statement, this is what we are having. Now, we have the Jackson Hole Symposium, which should happen soon. And of course, the markets are also waiting for that symposium to see whether Powell will cement on those expectations of a September cut. And again, we're going to look at the Fed Watch tool to see what it's currently pricing in for rate cuts. But this is what is currently, the markets are looking towards the September rate cut. I know the dot plot is showing that the Fed is going to hike rates in December, but it's kindly looking like the first rate cut most likely is going to come towards September. Okay, so let's cross over to the CME Fed Watch tool. So the CME Fed Watch tool is looking like this at the moment. If you go to July, which is the next bank meeting we have, that's for the Fed. They're going to meet on the 31st of July. So the 31st of July, which is going to be on a Wednesday, East Africa time, that will be about 9 p.m. And of course, their time, it will be about 2 p.m. They are looking towards holding the rate. The markets are not looking at a potential hike. Okay, so we are still most likely going to remain within that target range of the federal funds rate of 5.25 to 5.5. Now, if you go to September, for those of you that have been looking at this Fed Watch tool, previously in September, we were expecting there was a 45% chance of a rate cut in September. Now, as of now, we are seeing that percentage has actually increased from 45% to 70%. Okay, so currently, if you look at the probabilities up here, it's saying that if you're factoring in a potential cut of 50 basis points, that will take us to this target range of 4.75 to 5%. But again, it's very unlikely that the Fed cuts by 50 basis points. Most likely their first cut is going to be of 25 basis points, or 0.25%, which puts us here. So which means the markets are currently looking at one rate cut in September of 0.25% or 25 basis points, and there's a 70% chance of that. So I know 70% is not 90% or 100%, but it's at least I would say relatively high. So we can at least go by this to get some kind of indication on when the Fed is going to act on a rate cuts. So that's what we're having at the moment. And I believe this revision of this probability is possibly where we are seeing some rallying coming in for some of the risk on assets like gold and pound dollar and euro dollar and the like. Now, going into the calendar for today, we don't really have that much, I would say, on the calendar. Maybe looking at some of the data we have gotten from New Zealand. We've gotten some data from, external migration and visitors data. That really doesn't usually have that much of a move on the markets. We've also gotten some data coming in from China, the PPI data and CPI data. We are seeing that China's CPI again is in disinflation mode. It's now negative. It was in negative territory, gone slightly deeper into negative territory, but their CPI year over year has also steadily declined from 0.3 to 0.2%. We are also seeing that the Reserve Bank of New Zealand that met today they held their benchmark rate at 5.5%. And I don't know how that is affecting the New Zealand dollar. Maybe you can just have a look and see. You can just have a look at the asset here and see. So we are seeing that the New Zealand dollar is had a very sharp sell today on that holding of the rate. If you pull up your chart for New Zealand dollar, we are saying that it actually had a nice sell. Could be maybe that the Reserve Bank of New Zealand wants to act soon by cutting the rate. This was a sharp sell. Today is the 10th of July. So 4:30 a.m. we saw the New Zealand dollar, selling quite aggressively from that level. Again, it was on an initial downtrend, but downtrend intensified, and at the moment we are seeing that the sell is intensifying more and more. So I suspect the reason for that sell on the New Zealand dollar and why we should see more weakness for the New Zealand dollar for those who are trading the New Zealand dollar against the dollar, it could be on the back of renewed hopes of rate cuts from the central bank. So I would say that wave of rate cuts seems to be kicking in. We have seen it from the Swiss National Bank. It started by cutting rates. At the moment, they have already cut rates by 50 basis points. We're also now seeing more banks, jumping onto that wave of rate cuts. So that should allow us to see some weakness there. Now, going into the the US session today, CPI typically always comes out on Wednesdays. I don't know why the CPI is coming out on tomorrow, which is Thursday. So I know most of you were expecting CPI today, but actually CPI is going to be tomorrow. So you just have to wait for it tomorrow. Yeah. Now, going into the rest of the trading day, it's a relatively quiet trading day. We have crude oil inventories that are going to be coming out later this evening rather, at 5:30. And of course, we've been seeing that the price of oil has been on a steady uptrend. And possibly if we get lower crude inventories today, that should allow us to see a higher a lower number there for the crude oil price. And of course, if the number comes in higher, then of course that will allow us to see a lower number for the crude oil price. Awesome. That's really what we have here on the calendar. How the charts are looking like. In case you have any questions, especially regarding Powell's testimony yesterday, you can send them in. In case there's any question regarding the charts or anything you need to see on the charts, you can send them in as well. I'll be happy to take you through. So let's cross over to the MT5 in a moment. Okay, so all right, so for the MT5, we are going to start by looking at BTC USD. So BTC USD was in a technical downtrend. We've been stuck in a very, very nice range, or some may call it consolidation, all the way from Feb, all the way now to around where we are now, July. But we seem to have bounced off that line quite nicely, which again is my midpoint line there for my regression channel here. I think you're seeing it here. So we have been rising quite nicely there. We bounced off that level with a liquidity sweep, and Bitcoin seems to be now moving steadily higher. Now, I know that, again, I was finding it quite odd that when you have a lot of buying momentum on the risk on assets, we have typically been observing a relatively weaker Bitcoin. But then the catalyst for Bitcoin is just one that is specific to it. It's not, I would say, affecting all the other risk on assets. So typically right now sentiment is more bullish, I would say. We are seeing more things buying than selling, if you look at the market generally. So again, if you remove those catalysts that are affecting Bitcoin, like Germany selling crypto, rather Germany selling Bitcoin, then also the reimbursement plan by that collapsed exchange called Mount Gox, they are reimbursing their investors. Once that all ends, then I think we should see Bitcoin, steadily rising and possibly continuing its uptrend. Now, if you go to US 30 roll, now US 30 roll has been a relatively tricky um, asset to trade. It's been every single time it reaches new highs, it immediately sells back. It does not hold momentum. But I think the main catalyst that's going to send us higher, and I think I discussed this on Monday, is when we have the Q2 earnings kicking off on Friday. We have a number of banks that are going to be releasing their earnings on Friday. We have JP Morgan, we have Citigroup, we have Bank of NY Mellon, and I think I'm forgetting the fourth bank, but there are four banks. So if we get strong earnings, and the other one is Wells Fargo. If we get strong earnings from these particular banks, then I think technically we are going to see a break of this level here of 39,600. Once you take out this level here on the Dow Jones, I think the Dow Jones is going to now try to attempt moving higher. Uh, if you were to put the Dow Jones alongside the other indices, it's the only one that is lagging. It has more of its components testing 52-week lows. And I think the only sector that's going to allow this index to recover is going to be the financials. It's all going to depend on the banks. If we have strong earnings from the banks, then we're going to have a relatively higher index. If you look at big companies like Nike is testing 52-week lows. We know we're having some big companies like Walgreens. They have, it's a big pharmaceutical company in the US. All those companies are testing 52-week lows. So that is what is affecting this index. If you have more of the components testing 52-week lows, it shows you signs of bearish momentum. So we need some particular companies to come and push it higher. And I think the banks are the ones that are going to come and help it. So if we get strong earnings, then I'm staying bullish on the Dow. Generally, sentiment is bullish, so I'm staying bullish on it. And I'd be looking to buy or set my buy limits along these levels here. Below that 50-day moving average, I'll be setting my buy limits there. Anywhere closer to 39,000 is going to be a buy for us. Now, I know tomorrow we have the CPI reading. The indices have not, I think since CPI started coming lower and lower and lower and keeping itself between 3 to 4%, the indices have actually not been reacting as much to CPI. So if we get a lower reading tomorrow, I think that is going to allow this index to rally. And by Friday market open, US open, it's going to now set the Dow Jones to possibly come and break these levels. So right now, I'll be looking for buys anywhere along these areas below the 50-day moving average and possibly aiming for us to move higher. Now, if you look at that trend, we are also in a nice steady uptrend on this index. We've been testing, first of all, we had a golden cross, which is typically a sign of a bullish momentum. The golden cross is right there. And again, aside from a golden cross, we have seen a steady uptrend. So we should see this continue and again, possibly test those levels to the upside. Now, going over to the NASDAQ, I know you guys are going to see these arrows. I've not removed the arrows. The arrows are still there. This was from Monday. I was expecting the NASDAQ to at least come and test this area here, but we still have a very, very big order block that is holding the NASDAQ. And the NASDAQ is extremely bullish, extremely bullish. I do not think we are going to see very sharp pullbacks. The pullbacks will be very, very small. And before we see it possibly moving higher, we're going to be getting pullback after pullback, but it's not going to be as strong. Okay, the pullbacks are going to be quite minimal. So steady uptrend. We have not had a crossover on the Nasdaq since when? Since May. Okay, we are now in I think since around 9th of May, we've been having a very, very strong uptrend on the Nasdaq. We had this demand zone, which of course we discussed this demand zone. I think the snapshot for it must have been done within this week. Again, we advise clients look for buys along this area. Very, very nice entry there for a buy. We tested that demand zone below the 50-day moving average, went back into, went back into that area there. We had a nice descending channel there, again, which is a setup for a buy. We had a very nice liquidity sweep. We had an order block within this area here. That's around 19,600. Price tested that level. Liquidity sweep moved back up. Again, I think this order block after order block, I think is helping a Nasdaq to test higher levels. Now, the other thing, of course, I want to mention is we've been having certain components that have been affecting the Nasdaq and S&P 500. If you look at the different indices, you'll notice that most of the stocks within the Nasdaq are not at 52-week highs. Just a handful of them, and some of them include Nvidia. You have Nvidia. You have Apple. I think they're about 3 or 4, 5. And of course, also you also have to factor in the Mag 7. You have Google, you have Nvidia, you have Meta. All those are at 52-week highs, but they are just a handful. But because they have a very big, you know, weight, they have a big weighting on this index. If they increase in value, then they also push Nasdaq higher. Now, the particular component which is pushing Nasdaq is actually Tesla. We've seen Tesla testing higher and higher levels, and I believe since Tesla is below its 52-week high, we could then see this particular index possibly moving higher, uh, and seeing it, testing higher levels. Awesome. Yeah, so that's what you can see on the Nasdaq. Now let's cross over to gold. So this is how gold is looking like at the moment. Gold is setting itself up for a big rally. Um, I'm looking at gold possibly crossing above 2,400 this week. If we get an extremely cool CPI report tomorrow you're going to be with Rufus on a snapshot. Again, if we get a lower reading for CPI, I think gold is going to move higher. We should see gold possibly testing as high as 2,400. Again, yesterday's cross-examination by Powell gave gold a relatively indecisive move. However, we saw it holding above that 62.8% Fibonacci retracement level there and then moving higher. Gold is very, very bullish. We had this order block here that gold went into, and a bullish order block, tested it, went back up. We have tested it again. Let me just use arrows here so that you can see. Right here, right there, and again also right here above, testing that 50-day moving average before moving higher. So all this is pointing towards a bullish move for gold. If we get a higher reading for CPI, which I don't see happening, but in case it does, I want to see how gold fares within this area here. Okay, if we see gold getting into this area here, my key level to watch is going to be this level here, which is around 2,349. If gold tests that 2,349 level and fails to maintain price action above it, then I think we are going to see gold continuing its sell. But at the moment, with these red cut hops building more and more momentum, I think the most likely move for gold is going to be for it to test a higher level and possibly, break through this level here, or have a market structure shift around there and then start moving higher towards that level of 2,414. Now, let's look quickly at GBP/USD. Now, GBP/USD, we've been bullish on it. I think every other snapshot, we were looking for buys on it along this level. We say that if we have a nice buy, if we break this structure along this level here, then we'd be looking for us to enter a buy. If you see this arrow here, that arrow there was a nice buy that we provided there for GBP/USD, and we are seeing it testing higher and higher levels. I also indicated that GBP/USD has been having a bullish structure, indicating that as we stay bearish with these swing highs and lows that we've been observing, we would be looking for buys on GBPUSD. So at the moment, I'm expecting that if we get a cool reading for CPI tomorrow, then GBPUSD is going to break this level here, and possibly we are going to see it trading higher towards this level of 1.28. If again I go to my daily time frame, I'll then be able to show you that actually we have much higher levels to achieve for this particular asset. And again, we are hovering along that barrier that we had from the last CPI. If you recall the last CPI, let me just remind you all. The last CPI we had was here, where we had GBPUSD breaking this level here, going all the way this level here. And after moving up here, we immediately saw that there was not enough momentum for it to maintain price action there, and we saw it recovery. Now, the market is quite funny because where GBPUSD is seated at the moment is where we were just last month, around this time, between 10th to 13th of June. We're now 10th to about 13th of July, and now we are back here. You can tell by the dates. So if the CPI comes in cooler, we are going to have a nice buy, possibly moving all the way this way. Okay. Then if the CPI possibly comes in stronger or higher, I think then in that case, we should see GBPUSD coming to test lower levels towards its 50-day moving average that is currently oscillating along this level here. Again, I do not expect us to see a very, very sharp sell for this particular asset. So we should hold price action there and then move higher. Now, Euro USD, again, we have also been bullish on Euro USD. If you have been joining me with the snapshots, we mentioned that the key confluence support for GBPUSD was that level of 1.06482. We mentioned, I think, from that snapshot around the time when we had it, we said that if Euro USD were to break that level, then we'd then be seeing it possibly trading lower. But as you can see, we saw it failing to break, and we've been having a very nice uptrend momentum there. Again, it's undeniable, guys. You can see it very clearly. If you want me to use a line chart, you can see in trading we do not fight the trend. If you're a trader, never fight the trend. Trade what you see. Okay, and what you can see clearly there is that we are buying. Okay, so we provided a nice buy there, and of course we entered into that level there, had a nice market structure shift, broke this level very nicely, and again we saw Euro USD moving higher and higher. So looking towards the future and where we could possibly head to, the key level to watch for tomorrow is after the CPI reading is going to see if we get a cool reading, then most likely we're going to have a very big bullish candle that's going to first of all break this structure here of 1.08443. And of course, once we break there, the next level for Euro USD is going to be, is going to be testing this level here, which was during the last CPI. So the last CPI was here, okay? The last CPI was here. Again, we are just somewhere close to there. So if we get strong CPI reading, we're going to break this level here and then start trading closer to that 1.099 level, okay? So that's where we're heading to. Again, this is actually quite nice because we have just gotten a golden cross on the H4 time frame. A golden cross again is normally a sign of bullish trend. So if we have just had it there, I think then in this case we should look towards a relatively stronger, Euro USD. Awesome. So I think really that's it on the charts. You can just maybe look at USD CAD. USD CAD, we've not had a look at it in a while. I think the last time we analyzed it, we were looking for buys. So the buy played out, but again, it didn't go to our level. We saw it retracing from there. So tomorrow, this is also going to be a very nice asset to watch, since tomorrow we have the CPI reading. If the CPI reading, comes in way lower, then I think USD CAD is going to be looking towards breaking to certain levels. I think the first level for me to be aiming for, I have my lines drawn. I want to see how we manage to oscillate along this level here. If we break 1.36 600, and I think we are going to possibly move towards our 50-day moving average. But the moment the trend is down on USD CAD, it's undeniable again, guys. You can see the trend very nicely there. We're having a nice I've lost the chart. Where's the chart? It's right here. So we're having a nice downtrend here. Okay, if I'm to add my channel there, I think it's quite visible. The downtrend is quite visible. We've been having it there on USD CAD, you know, and then again we also have a death cross that appeared there on its H4 time frame, which was again a sign for us to look for buys. So death cross there, we had a downtrend, and again we have been seeing how that downtrend has been moving. So if we get a cool reading tomorrow CPI, then I think we are going to have a break to this area here. If the reading is not if the reading is higher, then again we are going to break through this level, and then we are going to see price possibly moving towards that level of 1.7, 1.37097. Okay, so question time. If you have any questions from me, then you know, you can send in your questions, and then we can go over them. Okay. Sam, you're saying what is an order block? So an order block is essentially where you have a pile up of orders. They can be bearish orders or bullish orders, and typically those orders stop the market from selling or buying below a certain level. So when you go to gold, gold has been having order blocks at certain levels. We saw there was actually one here on Friday. That's why you saw that after the CPI reading, rather after the NFP reading, despite it being bearish for gold, we saw that gold actually reversed and traded higher. Okay, same thing also yesterday. We saw that gold sold into this same order block that was on the Fed conference. Okay, so there was one here, so you can see wicks down, buys back up. Okay, same thing here, wicks down, buys back up. So those are order blocks, right? So until those, if case the orders need to be filled, if they are not filled, then the market will still buy. That's why you see gold is still looking bullish. Okay, because there is a lot of momentum pointing towards a higher move higher for gold. Now, next question. Just what you're saying, why are markets not moving? I can barely get an open opportunity. I think markets are about timing, just what. If the timing is not right, then just wait for the timing. Don't force the market does not move based on how you want it to. Okay, the market moves on based on how it has to move. So just keep watching for opportunities. When they present themselves, then you should be able to catch a move. Edwin Rengo, you're saying good morning, newbie here. Should I carry on with my trades or wait for these Fed stories to be done? Okay, I don't know what you mean by Fed stories. I don't know whether there's such a thing as Fed stories. Do you mean the Fed? Do you mean the testimonies by Powell? I don't know. I fail to understand what you mean by that. Now, guys, I know that this week we have I think 3 testimonies this week. We have a Janet Yellen, who had hers yesterday. Powell has another one, I think. If not today, I think most probably it's going to be tomorrow. Yeah, but most of the market has priced in most of what Powell has mentioned. I don't think you're going to get a lot of I would say the market has priced in everything Powell has to say. So if we look at what has to be digested by the market, there's nothing more than Powell can say that the markets already don't know. So now in that case, you have to be focusing on focus on the charts. Focus on the charts, look for opportunities on the charts. Just what you're saying, is it the Fed speech or CPI report? So tomorrow we have tomorrow I believe we have another testimony. I don't know if Rufus is on. I think Rufus is not on today. Okay, so tomorrow there's no testimony by Powell. So tomorrow it's only the CPI report. Okay, I've just checked the calendar for you. It's only the CPI report, right? Yeah, it's only the CPI report. So just focus only on the CPI, just squad. You don't give much attention to anything else, just the CPI report. If CPI tomorrow maintains, will the Fed have to hold or cut its rates? Now, that I think is a question that cannot be answered. I can just only give you, I can only anticipate for you. I can't say for certain when they're going to call the cut rates, because that's entirely dependent on the FOMC. However, if we get a lower reading tomorrow, I think the Fed is going to be more inclined to possibly consider cutting rates. However, keep in mind that Powell's guidance is still very vague. The Fed can only cut rates if the US economy sinks into a recession, or if they get to see, if they see the unemployment rate increasing, maybe 2x. There has to be something that's going to cause them to cut rates in July. But if we're looking at meetings between September, November, and December, then regardless of the reading we get from the CPI, the Fed will have to cut rates. Soon enough, they will cut rates. Yeah. You're most welcome, J Squad. Thank you very much. Okay, guys, I think that's it. Thank you all for joining me on today's snapshot. I think that's it. And again, I wish you all happy trading, and we talk soon. Cheers, guys.